Hello everyone, Ray from the Chart Wizard is here. We're back. It's good to be back. We took a bit of a break, 2 weeks time, and it's probably a good time to mention that we've partnered up with Light Forex Broker specifically to bring you this exclusive market analytics program that we have here. The program also includes education, training in the form of tactics, trading tactics, trading strategies, trading techniques, right? All the good stuff, no filters, no bullshit, really high-end stuff, guys. And the best way for you to take advantage of this is first subscribe to the channel. Just make sure you get those alerts for every video that we bring you, every new video that we publish. Also, a good way to take advantage of this program is to open an account, and start following us closely. We give so much, priceless information here, so it's really worthwhile. But let's focus on today's theme. Today's subject is the dollar versus the Swiss franc. And about a month ago, I had the first session about the dollar Swiss, where I've specifically mentioned my bullishness on the dollar Swiss from the short-term perspective, but also from the long-term perspective. And I talked quite in depth. I mean, we had a full analysis on the dollar Swiss. That was about a month ago. You can go ahead and check that out. I want to have a follow-up on this one because a lot of interesting things have happened since then, a lot of interesting developments. So I definitely want to revisit the dollar Swiss, check out what happened ever since, how things have played out, and what I think about what's going to go down from this point on. And also, of course, share with you my personal trading activities with regards to the dollar Swiss. So it's going to be super interesting. Let's go ahead and dive in. Alright guys, so I wanted to keep the exact same technical situation on my chart from last time we were here, about a month ago. So I kept everything in place. I didn't touch nothing, right? That's how it was. So, and you probably remember very well, for those of you who watched that video, I took a bullish position, right? I took a bullish position and I kind of broke down the expected move into two stages, right? The first one I refer to specifically a move towards 101.17. You can round it up, 101.18, which I declared as my primary price target. That was my primary price target that I was focusing on. And then I said that if price will break through, right, and continue to move forward, I would try to chase the next one, the next target, which was, and by the way, still is. That's the long-term, kind of the medium to long-term price target, 103.40, and that key level is based on the previous major high. That's it. That's the previous major high. I'm gonna show you that. For those of you who forgot, right? I'm going to show you that on the weekly chart. But I want to go back to that session we had about a month ago and talk about what led me to that conviction in the first place. So if you remember, when we were here about a month ago, price was just coming off. It was just giving us that huge reaction. You remember that spike here? So we were looking at a very profound head and shoulders pattern. So head and shoulders patterns are not one standard. As far as I'm concerned, I actually I rate head and shoulders patterns all the time. I give them I give them score with regard to reliability. What I'm mostly looking for whenever I'm looking at a head and shoulders pattern, it's quite really interesting. You want to make sure that the head is as further as possible from the shoulder. That's the most important principle, right? It has to be significantly further from the shoulder. You want to have low shoulders, shallow shoulders, and massive head. The bigger, the better. And that's pretty much what we had here, right? I was talking about that. We had the left shoulder, massive head, right shoulder. The shoulders were relatively symmetrical, right? So when price was coming off, this is where we left off, guys. Price was just coming back from above and given this amazing reaction on not only the neckline, but also this blue dotted line, which was the 38.2 Fibonacci, very important Fibonacci correction for the whole move from the bottom to the top, right? So we saw that reaction. We had these two elements here, both the Fibonacci key level and the neckline, which posed a really strong support, right? So we noticed that coming from the reaction we had that day. So I took action. It was probably the next day, maybe the day later. I'm not sure, but we were still in a relatively low area, right, where price was just coming off that neckline, and I began to chase price upwards. But I specifically said that if price is not going to be able to break through that 10118, I'm going to pull out. I'm not going to try and bang my head over the wall. If this is a strong wall, I'm going to respect that. And that's exactly what happened, guys. That's exactly what I did. What I noticed, and it's very quickly, right? Just I think it was 2 days later, price went straight, pretty strongly, I should say, right to that 10118, and you can see the reaction we had here, right? Pretty profound, pretty impressive, right? So we had that reaction actually, 3 months prior, when price was engaging with that same key level, right? So when I saw that price was trying to break through but failing, right? It was kind of, it was trading a little bit above that level at some point during that specific day, and then it closed back below. That was the first alarm for me. That was the first warning sign that price may actually behave similarly to what it did 3 months ago. So I pulled out completely. It's easy for me to do the calculation that if price is just gonna come back up, close back above that key level, I'm just gonna reestablish that position quickly, basically go right back into it. So I got out, and obviously a few days later, I kind of I thought it was a wise thing to do, because we saw price just continues to drop. At some point, I was on the sideline. I actually forgot about the dollar Swiss for some time. I was focusing on other areas, on other currencies, but I did kept that in my speed, in my speed bar, so to speak, right? But what I wanted to see, in order to get back involved with the dollar Swiss, it was obvious to me that I was gonna look for a buy trade rather than a sell trade, because the trend is up. I usually want to go with the trend, right, not against it. And the bigger picture suggests that price is more likely eventually, from a long-term perspective, reach the 103.40, as I've mentioned a few minutes ago. So I knew that I was going to get involved back in the dollar Swiss from the upside only if price will break below the previous low, but still be in a trading range, meaning not not overshoot itself on the downside, not break below my key level. I'm going to show you that in a minute, and start to reverse. That's going to be an interesting opportunity, right? So basically, guys, this is how we left off, right? This is the situation. Now I want to take you to my actual position that I have. Same dollar Swiss, of course, but now I'm going to show you my actual position, and we're going to continue talking about the interesting opportunity that we have here right now. All right, guys. So there you go. Take a look at this. This is my actual position in real time, right? And obviously you can see there is no neckline here. It's irrelevant at this point for me, right? That just, you know, I showed you that because that was last time we left, but right now it has no meaning. Same with the Fibonacci 38.2. It's irrelevant. What is relevant is the trading range that is starting to form, because like I said, when I was on the sideline waiting for interesting developments to occur so I can get back involved in this one, I wanted price to take the previous low but not extend beyond the setup. So what I did was I applied the symmetric setup on that trading range that was starting to form. Obviously I noticed that we had 3 legs, right? That's the minimum requirement you need for assessing a sideways movement. So I also noticed something quite interesting. I noticed the reaction we had here on the 200 daily moving average. Take a look at that, right? So price it took the previous low and reacted pretty impressively on the 200 daily moving average, but still did not pass, the bottom support, the last line of resort here, which is 98.85. At some point, actually, it began to turn around, and after a couple of days, and I actually marked that here with the yellowish rectangle, you can see that price began to pay a lot of respect to the 200 daily moving average after violating it a little bit. But then take a look, the first spike here, second, right, and then third. So price was effectively kind of caged in between the 200 daily moving average from below and the mid-low key level from above, the 99.67. However, let me take you back. We're talking about a few days, right? So when price was spiking that 200 daily moving average and pulling back up, you can see this is where I opened fire. You can see where I pulled the trigger. This is the first trade I entered. The following day, I noticed price was continuing to move upwards slightly. I decided to add one more trade, one more portion to this position, right? Then I knew that I'm going to keep I'm going to keep only 2 portions in, because I'm not going to keep increasing the position until I can see that price is managed to break above that obstacle. We're talking about that 99.67, which is a pretty strong resistance. Now we can see that price was actually reacting to that level before breaking it. The break was just yesterday, guys, right? So I kept that position small until proven otherwise, right? Until price can prove to be, resilient enough to break that resistance. And it did. Yesterday it did, and you can see what I did, right? As I noticed that break, as price kind of validated that it broke, and I'm talking about the daily close, of course. Even though I always say, the daily close is just a first indication, right? It still needs to be confirmed by a weekly close. But in this case, I was using that form of indication to actually add one more portion to my position. So right now I have 3 trades on this one, which is pretty much 30% of my maximum capacity for any position. But what I do want to talk about, so right now I'm still talking about the short-term cycle, because when we have that trading range, we always have to respect the key levels that we're working here with, which means that once we broke above 99.67, and even before, I still had to focus on the mid-high key level as final destination, right? Because what is very likely to continue to happen here is actually price will hit the upper section, right? Starting with the level of 100.57, probably deep into it, and then reverse to generate another leg. It is actually more likely that we will see another leg, maybe even 2, before the breakout of this system. Talking about the blue system here, the blue setup. Before it's going to break out of that trading range, it's probably going to produce a leg or even 2 legs, right? So, and because of that, because I know the statistics here, I'm going to pay respect for that resistance at 10057, right? I'm not going to try and chase the next move because it's probably going to be a downside move. Now, this is from the short-term perspective, guys, right? So I'm going to focus right now, I'm focusing on the short-term cycle. However, I'm still going to go back again to that same notion that once price breaks above, I think it's going to break above eventually. I do think it's going to take some time, but eventually it's going to break out, and I think it's going to break to the upside, right? So once I see clear intentions on breaking that area here again, right, 101.19 and the top resistance level 101.13. Then of course I will, I will be chasing the next move, right? The continuation of that move all the way to 103.40. Let me show you where this level is coming from, actually. So yeah, so you need the monthly chart. Actually, that's where this setup is coming from. This is a massive trading range, right? You can see how back in time it goes, right? I can track this one all the way back to August 2015, guys. That's how old it is. So that's a massive sideways movement. But what I find to be very interesting here is the fact that price, bear in mind, came from the very edge of the lower section, right? The very bottom support. That's where it was last time. And it came from that point. That was back, believe it or not, back at December 2017. That's how old that trading range is. But it came from below after it took the previous lows, right? And it didn't do the same on the upside. It didn't take the previous highs yet. This is what I'm trying to say. I think it's far more likely that price will, it did reach the minimum level required to assign a full leg on it, right? This is a full leg. It did reach the minimum area, right, which was the higher section. But because of the nature of that low we had here, which I just talked about, I think it's probable, more than probable, that it's going to chase the previous high, just as it did the previous lows, right? So I think it's going to go back to the higher section, deep into it, take the previous high, and only then possibly either reverse for another downside leg or actually break out, right? Break on the upside. That's also very possible. Right now, I'm trying to describe why I chose that particular 103.40, which is the previous high. It's not even the previous high. It's the previous highs, right? That was a form of double top, if you will. But the fact of the matter is, price is withdrawn to this area. Should be that area is kind of is like a magnetic field, if you will. It attracts price to it, and there's a natural resistance in that area that comes only from the fact that it was the previous high. Interesting stuff, right? Anyway, let me finalize this particular session that we have on the double Swiss. So you can see that I still keep my stop loss level in a healthy distance, right? And I do that because the daily break is sometimes sketchy. This might actually be some noise. So I want to see some more, sustainability in that move. I want to see more, at least a couple of more positive days before I'm going to adjust my stop loss level. Actually, price may take my price target before I'm going to get the chance to adjust my stop loss level. But this one actually was adjusted. My initial stop loss level was 98.20, so right now is 98.70, and we're expecting about 60 pip to hit the 100.57, and then of course we should wait and see how things are going to play out, whether we're going to have another leg or two, or we're going to go straight for that major resistance and maybe have a third attempt. Might be successful this time, right? The 101.19 here. Anyway, guys, that's about that for this one. That's about that for today. I hope you enjoyed that session. If you did, don't forget bottoms up, right? And also, don't forget, subscribe, follow us, and until next time, guys, be well.